This is Alex again. Video number three, trade number two. This is my second trade on this account, the one that I mentioned earlier. Video number three. So here is the second trade that I took. I entered this trade on Sunday, August 14th, at market open on the futures. This was a continuation from the last trade that I was doing. And on this one, there was a lot of lessons learned. And what actually ended up happening with this one was I ended up selling for a small profit of about $32,000, I believe. I believe it was $32,000. And I purchased the put options on the NASDAQ future for strike 13,540. And on this trade, what ended up happening was I was anticipating negative news being released for the monetary policy for the Federal Reserve minutes that happened on Wednesday, 2 days ago, which would be the 17th, I believe, at the Federal Reserve minutes meeting. So let's go over this trade. As you can see, I entered market open within the first 2 hours on puts for the NASDAQ future, strike 13,540. Let's pull up the screen. And this was on Sunday, August 14th. And on Sunday, August 14th, at the time I entered the trade at around 1700, all the way down to 1715. It was over a 15-minute period. On the 14th at 1700, the future was trading at 13,543.25. And on this particular trade, I was very bearish on the upcoming meeting. So that is the reason, that is the thesis that I took this trade, because of the fact that I saw a major buyer the previous trade. And the reason I took that previous trade was because I was anticipating the buyer to elevate the market in order to raise bullish sentiment. But I remember watching the previous Fed minutes, the previous Federal Reserve meeting, that everyone was incredibly bullish. And at this particular meeting, there was news, it was GDP numbers, and there was negative GDP numbers. And the market should have fallen, but it continued rallying. I didn't play anything. I was just watching for the sake of studying. But I remember that I remember hearing about that on the news. Everyone was bullish, and I remember watching it on the news that everyone was bullish. For clarification, I did not enter. I did not see any buyers or sellers because I was not watching that meeting. I just remember the sentiment. And on this sentiment, because of the previous day, with the NASDAQ rallying, or the previous trading session, the NASDAQ rallying over 2%, I entered because I was bearish because of the fact that the move was an effort to elevate the prices in order to make them appealing before the Fed meeting, in order to raise a positive sentiment that the Federal Reserve may be issuing monetary policy that would be positive for the overall market. So I entered on the 14th at 1700, and it was around the spot price of 549, in that range. As we trade overnight, I was up briefly on the position, and I did not sell because I was anticipating a negative monetary policy, because I was hearing around the world international news negative news on monetary policy from countries such as Norway. I believe there was Germany was in there. Just overall European countries and Nordic countries, there was negative news regarding it. Go into the next day, we rallied. I did not average down for the sake of risk management. I continued to hold my position, very bearish, and we rallied. I was down for a bit, but I noticed and observed that there was a major seller up here. So that is the reason, that is the confirmation why I continue to stay in the trade, plus the context that there was a major rally for the sake of bullish momentum going into the meeting. Fast forward to Wednesday, or the day before, and right before the close on Tuesday, we reached a high of week, And my mentality was I'm going to continue keeping this bearish position because we broke the high, and there are going to be a lot of retail traders chasing a high of a weekly high break in the hope of breakout traders. That's what, for the sake of this video, I was anticipating breakout traders to chase this. As expected, breakout traders did chase this. Major seller pressured the market and continued downward. So we enter the overnight session. Futures continue to sell off. Enter the next trading session, regular market hours. Fed minutes right here, and we created a supply. And the reason I continued to hold throughout the Fed meeting was because I noticed that there was a supply forming. Whoever this major seller was, he or she was firm on their position, and they were creating supply and they were creating orders right before the meeting. So I saw that there was major selling volume and major sell orders, so I continued keeping my bearish position. Fed minutes are released, and we can see right here at the height of the Fed minutes, it sells right into the area where whoever that major seller was. I am not implying anything. I am just stating that there was major sell orders right before the meeting. And I see right here, we continue to sell off, and there was demand down here. But I noticed that as it reached into the demand, the buying volume was lower. And I noticed that context, the news was dovish and hawkish, no bear or bull side. And the context that the buying continued to get weaker and new sell orders uh, made me confident in holding this position. We continued to re-enter this seller's orders, and we sell off into the Friday session. For As you can see right here, this is the 19th on Friday for 273 point sell off, 273 and a quarter point sell off, 2.02% sell off, all caused because some major imbalance onto the sell side and major volume. And I exited my puts. Um, Give me a moment. I exited my puts at 6:44 a.m. And again, as I mentioned at the beginning of this video, it was for a very small profit, for about $32,000. And let's go over it. The reason why I stuck in this trade was because I saw that there were major sellers, and also the fact, for context, that there was a Federal Reserve meeting, international negative news, and the United States was to follow. Also, keep in mind the previous trade, I played it to the upside because I noticed that I was anticipating bearish news the week before for the Federal Reserve meeting. I played the upside, profited nicely on that, and I expected a negative news for monetary policy, and that exactly, or my expectation, is what happened in the market. Hawkish news was released, very neutral, and then the seller continued to get their orders filled as shown earlier in the video. So for sakes of what I learned in this trade, what I learned was make sure that you are on the opposite side of breakout traders, because I could have juiced out more profit on this trade. I could have made this a few $100,000 profit trade, if I had waited for a break of the high of the weekly high, because I was expecting bearish news, and a breakup of the weekly high would have been bullish to retail traders. Um, and if I had waited to there, or if I waited to have entered it over there at the weekly break, I would have been able to maximize profit. But I ended up holding because I saw there was major selling volume. I was expecting breakout traders to chase, which is exactly what happened as shown earlier. And I ended up walking out with a I believe it was $32,000 profit. And another thing I learned was to make sure that you are positioning yourself when the maximum selling volume is presented. I ended up doing good on this trade because I was putting together international context together with the tape context of that seller or that buyer from the previous week. And in terms of risk management, I would give this like a 3.5, 4, because I could have done better. I could have done better. I could have entered the weekly break high, the break of the weekly high, uh, getting on the opposite side of retail that are chasing it because they would have viewed it as a bullish indicator before the meeting. And I should have waited as we got closer to the meeting for that reason. That's the main lesson I learned. Wait till you get closer to the meeting. Do not enter in days before. Second thing I learned was risk management. I could have continued to average down on puts because I was anticipating bearish reaction to the news of the Federal Reserve minutes, but I did not. I I could have. I would have made a lot more money, but for the sake of risk management being one of my principles in trading, I did not enter an average down on contracts because I was already in, I believe, 300 or a few. I believe it was 400, 500. I don't know. I think it was $500,000. I was already in that deep. So, for the sake of risk management, I would not have entered an average down, which was a very smart decision. It would have worked out, but for the sake of trading principles, I do not want to break my principles and fundamentals when I trade. So, I learned risk management through there. And I also could have held on to this trade for the entire trading session, which happened today, August 19th. I sold at about 15 minutes into the open because I was expecting day traders to wake up and see the news, selling for or panic selling for the first few minutes. I could have stayed on this move this entire day and profited nicely on the entire downside move because of day traders, retail day traders, um, panic selling and trying to chase the knife or catch a falling knife, as I like to say it, which never works out. And they would have continued to continue to attempt to call the bottom and also continue to try to short a breakdown. And that would have worked, but for the sake of risk management, I was already in too deep. I was already in long enough. I took my small profit of about 31, 32,000. So for this account, I am up about started with I'm up about $186,000 in the first week. And again, like I mentioned in my earlier video, this could have been a lot higher if I had better order execution for my selling options on the previous trade. I could have been up like 350,000, 350, $360,000. But for the sake of risk management and lessons learned include risk management, having an edge when you trade, having an edge on your orders, buy and sell, and having an edge over the average day trader, average retail trader. For all those lessons learned, I would say that I did amazing for the fact that for the sake of risk management, I did not average down. I also stayed. I was also staying very confident in my decision. It was not a cockiness or arrogant decision to stay in. It was a confident decision because there was a plan, and the plan was to play the bearish reaction from the Federal Reserve minutes meeting. That's exactly what happened. I followed the plan, and I exited for a small profit. I could have made more, but for the sake of risk management and the lessons learned and my trading principles, I did not want to risk any more to make more of a profit. It would have worked. It would have worked, and I would have been right, and I would have been correct. But for the sake of my principles, I chose to stay in the same position. So that is the performance for the first week. As you can see, I opened the account. It's shown on my previous video. I opened the account on August 11th. It's August 19th today. And at the time of recording this video, it's August 19th. So in the course of 8 days, I believe 8 trading sessions, I am up about 19%. It would have been a lot more if I could have gotten a better execution on my last trade, but lessons have been learned, and I am up in the positive in profit. I will continue to trade and record every single trade that I take. This is my first time trading with large quantity, and this is my first time actually being in the action on the futures and calling and being and applying these principles to the future or to the futures. I will be making more videos and speaking extemporaneously. So if you hear the ums, you hear the pauses, the little pauses and like bloopers, if you will. I apologize. Don't know a better word. That's the sake. I keep it extemporaneous for the fact that I have the best realizations speaking as I'm recording these videos. But those are lessons learned, and this was a win. Could have been a better win. I could have done better on this, um, but it was a win, a small win. And part of my trading principles is that every trade should end with a large gain, small gain, medium gain, break even, or a small loss. There should never be a major loss because you always have to keep risk management in mind. And you always have to only take trades that you have a competitive edge on. You never know which trades are going to work out. You never know which trades are not going to work out. But you can know which trades you do have a edge over the majority of the competition, and that is where you strive. You strive by living your life on the margins on trading. So those are the lessons learned. I'm going to be posting these videos soon. And actually, no, if you're watching this, I've already posted it. But I'm going to be posting these, and if you're watching it, it means I have posted it. And I'm going to keep this as a private, unlisted account to monitor my progress. And just, just if you want to keep on following along, it's cool. If you're watching this, it means I sent you the link, and I think it really would be pretty generous and nice. If, not nice, but I think it'd be pretty cool if you guys were like to like tag along and watch it. So just you guys are interested, let me know. This is my performance for the first week in trading. Only took two trades and performed very well, up about just shy of 19%. Okay. Thank you for watching. Have a good one. I'll see you around.